So if you are self-employed, any kind of business owner whatsoever, you could own a construction company, you could be a real estate agent, you could be a TikToker, you could be OnlyFans, any kind of business owner, and you want to buy a house, you want to watch this video. So for the longest time, business owners have been denied getting a mortgage, denied buying a house if they had too many write-offs. So we all know one of the biggest benefits of being a business owner is you make a lot of money, you write a lot of stuff off, you don't pay a lot of taxes, right? So when I went into the business ownership world, that was one of the big draws is, hey, I can make a lot of money, I can avoid paying taxes, right? Legally. Okay, legally avoid paying taxes. And the same might be true for you. You could be any kind of business owner, really any kind of 1099, self-employed, sole proprietor, C corporation, S corporation, LLC, and you go into a big bank and they told you, no, you do not qualify to buy a home because you have too many write-offs. You don't make enough money. Well, they're looking at just one portion of your income. They're looking at your net income at the very bottom of your tax returns. And we all know that number can misconceiving because you're actually making a lot more money than your tax returns show. So we have a plethora of options for business owners in that exact situation. So one of the top programs that I've personally helped dozens and dozens of business owners with is called a bank statement loan. So the bank statement loan, we don't want to even see your tax returns. Don't give it to us. Don't pull it out of the drawer. Don't call your CPA to get a copy. We don't need it. You simply go into your online banking, you download your last 12 bank statements. You send that over to us. Depending on how much you're depositing every single month into your business bank account, that is your income. So let me just give you a couple of examples. Let's say you own a restaurant, okay? You own a restaurant and you deposit $200,000 or $100,000 a month into your bank account. A restaurant is typically a higher expense business, right? So you gotta pay staff, you gotta pay for food, you gotta pay rent. So even if you deposit $100,000, we will use 50% of your deposits. So if you deposit $100,000 a month, your monthly income with a bank statement loan is $50,000 a month. Now, let's say you're in a different type of profession. You're in a profession that doesn't have a lot of expenses. For example, a loan officer like me or a real estate agent, right? So if you're a real estate agent, you pay for your yearly fees. Maybe you rent an office, maybe you don't, maybe you work from home and you have some signs and maybe you have an assistant, maybe you don't. So either way, a realtor or a loan officer or someone in the service field, say you're a coach, right? Say you're a business coach, you're a consultant, you don't have a lot of expenses. So in those cases, if we do a bank statement loan, we can use up to 90% of your deposits. Okay, so in the same scenario, if you're depositing $10,000 a month as a consultant, we can use 90% of those deposits as your income. So your income would be $9,000 a month. So this is a great option for business owners, entrepreneurs. The other great thing about this program is if you have decent credit, right? I'm talking like at least 700. If you have a 700 credit score or above, you can buy up to a $1.6 million property with just 10% down. So this is a huge benefit as well. So even though you are not using traditional financing, you don't need a huge down payment. One of the things that I've heard is this sounds like a scam. This sounds like in 2008, where they were just giving crazy loans to people that were fraudulent or stuff like that. Absolutely not the case. This is a traditional 30-year fixed mortgage. The only difference is instead of looking at your tax returns to qualify, we're just looking at your bank statement deposits. That's the only difference. Other than that, completely legitimate loan, just like a 30-year fixed loan with any other loan product that you see out there. Now, let's take it one step further and let's say you don't have a ton of deposits. Maybe you work in a lot of cash. Let's say you're a handyman. Let's say you're a hairdresser, something like that, and you're getting a lot of cash and maybe you're not depositing all of the cash into your business account. There's another option that we have available for you. It's called a profit and loss only loan. So with this loan, we don't even need to see 12 months of deposits in your bank account. All we need is a profit and loss signed off by a legitimate CPA or tax preparer, and they sign off on that profit and loss. they write a letter saying, I confirm Martha Stewart is a hairdresser and she has a business and she's been in business for 2 years plus, and I sign off on this profit and loss, you can still get a loan. You could still get a mortgage to buy a house. And even with the P&L loan, compared to the bank statement loan that we talked about earlier, you only need 10% down. So the one thing that I want to keep in mind, I just want to be totally transparent with you guys, is when you're doing a bank statement loan or a profit and loss loan, because it's a little bit of a riskier loan compared to a conventional loan, the interest rate is a little bit higher. It's not a crazy amount higher, but interest rates on bank statement loans and profit and loss loans, depending on your credit and depending on how much down payment you put, will be 0.5% to 1% higher. Then the math becomes, okay, does it make more sense for me to not write stuff off in my business? Right? So that's what a lot of business owners tell me. They say, okay, well, I'm ready to buy a house this year. I'm making good money. Does it make more sense to show a big net income on my tax returns, write a big check to the IRS, and get a better interest rate with a conventional loan? Does that make more sense? Or does it make more sense to keep my write-offs, don't pay taxes or pay very little in taxes, and then on the flip side, pay a little bit more in interest on my mortgage? Which one makes more sense? So again, every single person's situation is different. But what I have found is when I sit down with my clients and I compare and I say, hey, you're gonna write the IRS a $20,000 check. You're gonna show the correct net income to qualify to buy a house, which sounds fine, right? Sounds like, okay, great. 1 year, I pay a lot of taxes, I get a better rate on my mortgage. However, most of the time, when you do the math, how much you're gonna save on the mortgage versus paying a big chunk to the IRS, it doesn't make sense. If you're gonna pay the IRS $20,000 and then on your mortgage, you're gonna save $200 a month, do the math right there. $200 a month is $2,400 a year. It's gonna take 8 years to recoup your 20 grand that you paid. So again, every situation is different. You know, if you're interested in running your specific scenario, you can always book a call. We can run through it with you and see what you would qualify for with a bank statement loan or a P&L loan. But again, most of the time, the math doesn't math. Plain and simple. The math doesn't math to pay the IRS a big chunk, a big tax payment to save a couple $100 on your mortgage. It just usually makes more sense to keep your write-offs, pay very little in taxes, get a little bit of higher mortgage payment versus writing that $20,000 check. That's pretty much it. It's very simple, lots of options available. So again, if you're a business owner, entrepreneur, online business, you're in marketing, you're in sales, and you're in any kind of business, even door-to-door sales, and you're a business owner, 1099 self-employed, we can definitely help you out getting into your next house. You can always book a call below.